Well, well, well. Guess who has decided to come back? Dave Petzo, the Petzo Center, Petzo Financial. We were thinking about you all last week.
Oh, I was thinking of everybody, too. What a tough week to be gone. It's one of those things that's kind of hard to fly back from Hawaii, right? Long time. You know, you set these vacations, 6 months away? You know, no way to wake up on Monday and go, what? What the heck happened? So I'm glad to be back, Kevin. I am. Well, it's good to get back, and it's always tough to be gone those weeks. You know, it's not like you're going to do anything. You don't overreact to markets. You're not like, oh, well, we should be doing this and doing that. The answer is no, but it's tough to be gone.
A lot of people were overreacting, and, you know, having been trained by you for 8.5 years here, the ups and downs, I was surprised at the panic based on the fact that we've had such historic gains, and you have, it going up 1,000 points in a week, then it dropping 1,000 points, and then it regulating itself. And again, I'm no Dave Petzo here. I'm no Petzo propagandist. But the people that are in the market still had a really good run. Mm-hmm. And when you think of the percentage of the market, it's minuscule compared to the gains that have happened, right?
It's, as President Trump would say, the gains have been huge and the losses minor. And so it is, you're absolutely right, Kevin. That's the right perspective. Unfortunately, at the time, and the way human beings think, we often we have something that goes up, you know, from $100,000 to, let's call it $150,000, and then when it goes down from $150,000 to $140,000, we don't say, wow, I made $40,000. What do we say? We lost $10,000. And that's the way our mind works. And so it's a constant battle to not be thinking about how much you lost when it's, you know, without considering how far we've come, just to your point.
Now, wait a minute. I don't know if this would happen to you, but, and I'm sure it didn't, but for the sake of theoretical or theatrical license here and entertainment at KIDO Talk Radio, I could just see some people going, the market is blowing up, and Dave Petzo's in Hawaii. How dare he?
Right.
And I'm sure that didn't happen to you, but I mean, it just is so, you know, you could almost write something about that. Well, what are you doing in Hawaii? As if you can, you know, wave a magic wand and save
Could have
the
known
markets.
6 months ago this was going to happen, and I didn't care enough to be here.
Right.
Yeah, I know. I mean, here you are in Hawaii Saturday, right? And everything just looks fine. It's no big deal. You wake up on Monday and you're going, what the heck happened? Yeah. But it is. And you're right. And it is one of those things where you do feel it does, believe it or not, it doesn't help your vacation. It really doesn't. You're always trying to figure out what's going on. Whether you're out playing golf, hanging on the beach, you're always trying to figure out what's going on, and you're really not having downtime. You know that, Kevin. You always keep up on stuff in your work. You always do. Because you have to. You can't come back just completely blind.
Right.
But when the markets are doing nothing and you're away, it's okay. But when they're not, then you just feel a little anxious.
A little disconnected?
Yeah, I don't think. I wish you could disconnect, but you can't. Yeah.
Indeed. So let's delve into this. What happened?
You know, great question. And
because, Dave Petzo, you should know everything.
I should know all. Right. First of all, I think the best way to look at this is that corrections are normal, and we've had 9 of them. 9 since this bull market began in 2009. Approximately once per year. Not just this time, but once per year. Historically, this is normal. And they almost always happen for no reason at all. There just isn't a particular thing you can put your hat on and say, here is the one reason why. We've had no volatility. Volatility picked up. That's great for the machines. So the machines take it and run. I'll give you multiple reasons. I think it's part of all. And the machines, which are algorithms, and they run according to what? However, whatever current conditions they are. Right now, the current conditions seem to be, if interest rates are going up, we're going to sell. And so we saw interest rates rising dramatically. Why? Good news. Let me come back to that later. All good news. But with interest rates rising and the algorithms going and seeing that and recognizing that means sell, they go out and they sell short the S&P 500, which means all companies, and push the market down. That picks up more momentum on the downside. That's part of it, almost like a flash crash, if you will, where we had that momentum on the downside for no fundamental reason. And with interest rates rising, coming back to the interest rate situation, we see interest rates rising. Is that bad for stocks? The answer is when interest rates are low, it's not. but temporarily it causes disruptions. So I think it's a combination of things, Kevin.
Well, people have been saying, though, and this is even before Congress cut a deal, it had to do with the $400 billion being blown up in the deal that just happened. The overall deficit or debt could be over $2 trillion next year. Mm-hmm. That's a lot. David Leroy was in here the other day saying one of the reasons why he's going to Congress is currently, eventually we could be owing $1.35 on every dollar we bring in, something of that nature. This is a problem that you and I have talked about for years. You, Mike Crapo, and I have talked about for years.
Yep.
Now, you have an interesting take on the debt that we haven't heard
That's
about.
a nice way of putting it.
Well, you do at KIDO Talk Radio. So your thoughts on some real concerns about the debt. Should we be concerned about actually paying this off?
Right. Okay, there's a number of things to think about it, and I have always been a deficit hawk, if you will. I don't believe you should ever, whether a household, a government, and especially city and local governments, they should never, ever allow for deficit spending. Ever. I wish the federal government didn't as well. But they do. And so we are where we are, and we now have a circumstance where would I like to do, one, try a tax cut to generate a more reasonable corporate tax system and keep jobs in our country and improve growth? The answer is yes. I'd rather take a $1 billion shot or $1 trillion shot at the deficit because I believe it's going to actually add trillions of tax revenue that it won't be a negative. So, one, I think if it's economically stimulative, it's worth doing, especially as to bringing our tax code into some kind of reform. The second part I would say is if we do increase our revenue as much as a 3.5-4% growth rate would, then deficits will take care of themselves. My problem with the deficit is not the size of the deficit, Kevin. It's the size of government. Government is so big. And when we talk just about deficits instead of how much of an impact it has in people's lives, we miss the whole picture in my mind. We miss the idea that everything government does takes liberty from you. It also takes money from you. It takes away something. It tells you what you can and can't do in some way. And I don't want to see more of that. I want to see government shrink, not grow. And when we focus only on the deficit side, we act like if we can balance the ledger sheet, then all of a sudden we have the right size government. And that just in my mind is wrong. Government is supposed to be small and out of the way of people. It's supposed to be local, not federal. And every centralized government that ever has been a complete and abstract failure. Communism just turned 100 years old. That's the epitome of it, right? Of centralized government. It turned 100 million people. 100 million people have died since it started. It's a failure in centralizing government. So that's my take on deficit.
Right, but still, we're going to have to pay this back. Otherwise, the Chinese and others won't continue to buy our debt. Won't there be pressure on the foreign market, since we owe so much to them, to raise our interest rates?
They are. It is an auction, and so you have insurance companies, pensions that must buy a certain amount of government debt. Period. There's no reason, for example, that in Europe interest rates are even lower than the United States. We are growing faster than they are. We're further along in the interest rate raising curve. But the point there is that why would you buy an Italian bond for a lower yield than the U.S. government? They're more in debt than we are, certainly as a percentage of GDP. So, Kevin, I agree, but I don't see that being pressure at this point in time.
But now the bond market, the U.S. Treasuries have gone from 2.3 to 2.8 and now up to 2.9.
Oh, yeah.
Now, I don't know what that means.
That's the pressure on the market. That's part of the pressure on the market.
Maybe somebody could help us out or help me out at 580-5436, 580-KIDO. But, again, so when stocks are bad, bonds are good. When bonds are bad, stocks are good. Is that
sometimes, not always. No, they often work in tandem. That's just it's an old adage that it just doesn't necessarily work. And in this particular case, we actually had last week because of the turmoil. Part of it is, again, the machines, Kevin. It doesn't make sense every day. You can walk in one day and explain the market went down because interest rates went up. The next day, interest rates go up and the market goes up too. It doesn't always follow in sync. But you're right. When we have really bad days, like the down 1,000-point day, you saw a rally in bonds. Why? It's called a flight to quality, where people get scared, they go and they run to debt, they run away from stocks and run to debt.
Right. And again, it comes down to eventually having to deal with that debt.
Yes, yeah. But when you see interest rates rise, that crushes bonds, absolutely crushes them. And again, I want to reiterate, when we think about this on a fundamental basis, things are good. The GDP is growing, the economy is picking up and accelerating even more than the unexpected 3% plus core GDP growth rates that we saw last year. That was unexpected, and we haven't even seen the effects of tax reform yet. So GDP is growing, business confidence is solid, and at record levels is consumer confidence as well. We're also seeing housing, all of that is doing very well, and corporate earnings, 17% year over year. We're almost through earnings season.
More with Dave Petzo. By the way, since Dave has been away, we would love to hear from you. 580-5436, 580-KIDO. Is the end near? Is this the end of the vaunted bull market? Is the bear market here? We have a lot of people all of a sudden becoming instant experts on national radio about the bonds and everything else, along with the stocks. So Dave will take your calls next at 580-5436, 580-KIDO. You're listening to Kevin Miller on KIDO Talk Radio. Dave Petzo, he's ready for all comers today. Let's go to Hank in Boise. Hank, by the way, it was great to see you at the birthday party. Thank you for stopping by.
Well, I'm glad to do so and contribute to the shelter. My question to Dave Petzo is what? When Janet Yellen basically raised interest rates, was there a possibility this was a political move? Because I didn't see a lot of evidence there that we were going into a steep increase in inflation, and I'm wondering how much of that was political. And my second question is, by keeping the grocery tax, don't we encourage more spending on the part of the state? I mean, I know the our Governor Butchie Baby Otter wanted to pay off cronies and political payoff, which is his modus vivendi. But in the long run, doesn't it, by keeping that tax, we're increasing state spending in the process?
You know, as far as the Janet Yellen, they had forecast that they were going to raise interest rates. I assume you're talking about the December rate hike?
Yes, because I think that's what triggered the sell-off.
Yeah, in many ways, Hank, I really think that the Federal Reserve is behind the curve. We're seeing wages increase, and I want to normalize interest rates. I'm sure you do, too. I would like to see the market really more governing rates, and I think we're seeing that. But in that process, it gets a little messy. I think we're seeing that right now with some of the interest rate increases affecting the market on a temporary basis. But generally speaking, Hank, this economy is accelerating, and the Federal Reserve is really a little bit behind the curve, in my opinion, to normalize rates in this hot of an economy. It's hot, actually, Hank. We're not used to actually talking about an economy that is really up and running. And my concern now, more so than is our interest rates too high, is our interest rates too low relative to how fast I believe we will be growing by the next 6 months, 6 to 12 months.
Mm-hmm. Well, the growth rate, we're going to be around 5 or 6% this year.
I don't know if core GDP will be that high, but if core GDP is over 4, and I think there's a good chance of it being there because we're well over 3 now. And when I say core GDP, what that does is it excludes such things as international trade, because it's very volatile, right? It's kind of like CPI, where we exclude things that fly up and down like energy prices and stuff. But core tells us what is business, what are consumers spending within the United States. That's a better measurement in my mind. But we have had a continued acceleration throughout the year. This is prior to the tax cuts. So I really think that the Federal Reserve has done a very good job of forecasting and not surprising the market. I am really quite sure that we're going to raise rates again. What is it? Is it February, Hank, the next meeting comes up, or is it March? Anyway, I think it's February, and I'm pretty sure they're going to be raising rates.
Okay, yeah. Of course, the contrast during the Depression was that they jacked up rates. Like one of the reasons why the Depression got started was the Federal Reserve made several bad calls and where they basically overvalued money during the Great Depression.
No, absolutely. That was a huge problem, of course, and so were the tariffs. And no more. Closed down the borders. We became very nationalistic. There were a number of missteps legislatively, and certainly, you're quite right. Tightening when we needed to be expanding monetary policy was a disaster.
Okay. Well,
Thanks,
thank
Hank.
you.
Thank you.
Thank you, Hank. Traffic and weather together. And Kevin Miller with our great friend Dave Petso. He's a popular guy today. Lori joins us from Boise. Lori, good morning. You're on KIDO Talk Radio.
Hello, Kevin, and happy birthday again.
Thank you.
It was good to see you over the event. And I 100% agree with what Dave is saying about the federal deficit and the danger and the growth of the government. And I wrote a letter to the editor, sent it out to various papers on this issue. The irony, because I testified in the hearing for the Convention of States and listened to the vote on it on Friday. And Friday was the day that the Congress raised the deficit level. They did it in a roundabout way, but they added essentially more than $1 trillion to the deficit was what they did. And that was the very day our state legislature killed that in committee. And the Convention of States, and they said, we have so much opposition to this, and it's coming from people who are both on the far right and far left that are fearful of a runaway convention or whatever. But it's just ironic that the frame was Alexander Hamilton said we can safely rely on the state legislatures to rein in, to use this Article 5 to stop the oppression of government, and yet we have people saying, oh, we do other things, that we're afraid of it, and we can't trust our people to come together and vote on this too. And really, it's just the best way to do it. And yet Idaho, supposedly a conservative state, has refused to join in this. And so I'm hoping that in a year or two that we can bring this back, and the sentiment and against this runaway federal government will increase. And appreciate Monks, Armstrong, Holtzclaw, Manwaring, and Hagedorn, who testified and voted on it, and Representative Lorcher. There were 5 that voted and 10 that voted against it, and they're just so fearful because of these voices that say, oh, we'll do it another way, we'll do some other path, or we won't do it. It's too, and we sit here with a tool in our hands to restrain federal government, to restrain spending, and we don't use it, and it's just, I'm sorry, and we need to just move forward with this Article 5 that the founders gave us. So, anyway, appreciate what Dave said about the deficit.
Thank you, Lori.
Thanks, bye.
Bye-bye. Well, what say you on the Convention of States?
That's way beyond my capacity. I don't know whether it's good or bad, honestly. I have heard very intelligent arguments on both sides, and I just would have to study it more to have any opinion. Honestly, it's something that I think is there and we have the ability to do. But I, like most people, always get concerned when we're talking about challenging the Constitution. And maybe this is the time because Republicans do control. But when Democrats control, do we want to redo it? I don't know.
Well, Dave Petso, let's get back to the money. What's going to happen this week?
Thank you. Let's go to the money.
Let's go back to the money.
A lot more comfortable talking about that. I don't know if we're done with this. I assume we're going to have some more volatility. Volatility doesn't tend to immediately go away. It can subside, but it takes time. And when we have this kind of volatility, you can have turnarounds. I saw the futures were well up this morning, but we can always open up big and turn around and lose it. We've seen that in the past week. So, again, I don't hang my hat on that. I think that the market will find its footing. There is fundamental reason to believe it. And where in the world is money going to go? If you think you're going to put it in bonds and watch interest rates rise and crush the value of your bonds, money managers aren't. They're running from bonds right now. Cash, again, still earns 0. And the other category is stocks. Those are the 3 highly liquid categories to put money. And that's why I continue to say that stocks are going to continue to get the bulk of the money because fundamentals are super strong. They are, in fact, I just cannot think of a time in recent years we've had this kind of fundamental growth since Reagan days, frankly, where we've got underlying GDP, we've got the animal spirits that we talk about all the time, Kevin. It's there, it's real. People are out there going to work. They're keeping more of their money now with tax reform. I think it's all positive, and earnings are just beginning to show up and really start to grow. I don't know why you wouldn't be in there.
You're saying it's all positive?
Yes, it is. When we're talking about economics, yes, the GDP is growing great. Business confidence, consumer confidence, inflation's still low, and yeah, it's ticking up. But to be concerned that inflation is ticking higher because of growth says, because it's so good, I'm going to pick this one little thing over here and say it's so bad. You can't have it both ways. If we are going to get good growth, we are going to have a pickup in inflation. And not very long ago, as in maybe just weeks ago, everybody was concerned about deflation, not inflation. So we're concerned about deflation. Now we get a little bit of hint of normalizing and getting some inflation. Now it's bad. So again, I feel like I'm having the argument with the same people all the time. This is bad, and that's bad.
But now they've got evidence against you. And your beloved bull has gone out the door. Isn't it? Can you hang on for a minute?
I can.
All right, more coming up with Dave Petzo next. You're listening to Kevin Miller on KIDO Talk Radio. All right, more of your phone calls with our great friend Dave Petzo, Kevin Miller in the morning. So, Dave, you wanted to say something about the fear and everybody yapping about the markets before we continue on?
Well, it's interesting that we go with how much people are afraid of something that's so totally normal. You know, it's, again, like you and I were talking about in the break, it feels a little bit like, honey, I'm sorry you're afraid of the lightning, but, it kind of comes with the weather. It's a normal thing, and it won't hurt you. And corrections are normal and won't hurt you either. And that's why we talk all the time about the fact of no matter how you feel or what the markets are doing, let's say they're doing well, then sell if you're going to need the money in the next year. That's what people always should be doing. Not guessing what the market's going to do and be all in or all out. That's when people get psychotic with their behavior. And we don't mean to make fun of them. We're not making fun of people. We're trying to teach. And the idea that people are going to be able to game this when Warren Buffett and all the other great investors of all time can't, but you got this thing nailed, is absolutely, it's delusional. And that's what's weird about this, Kevin, is all this hyperactivity about something that's so very normal. Like we pointed out earlier, Kevin, 9 corrections since 2009 bull market began. 9. That's normal. 9. And all the things we've talked about since you've been here, 8.5 years, is that right? 8.5 years, we talked about all the Europe Part 1 and 2 and QE and when this happens, that happens, and all these things, and it just never comes true. But the same people come out of the woodwork every correction.
Let's go to the same people coming out of the woodwork. Jake in Meridian with Dave Petzo and Kevin Miller, KIDO Talk Radio. Good morning, Jake.
Good morning. Dave, one of my investments, I'm in a publicly traded REIT. And with the rising interest rates, is that something that I should get out of and maybe move over to like a floating rate fund?
Wow, that's a tough one. Jake, that's a tough one because they're two very different things. Like floating rates are just there for income, right? A REIT is still going to be growing their business, and I would assume you're in a REIT that has been growing its dividends over time. If not,
Correct.
then I would definitely be getting out because we need that growth. That's our buffer, if you will. If something isn't growing, it's shrinking. Nothing in the world stays the same. If we're not growing, we're shrinking as people, our minds, our bodies, whatever it is. And that's also very, very true in business. So we need to be thinking of it in that sense when you're picking them. As far as telling you to buy or sell a particular REIT, I wouldn't do that. But to me, they're two different things. And the REIT right now, of course, has been taking it on the chin because of interest rates rising. It's it's just not a favored sector right now. Nobody wants it. There's no big growth. Everybody's afraid of retail and all those other things that come together to say, nobody likes it. So my answer to you, though, is to say maybe it's really super cheap and you're just bailing at the wrong time. So take a hard look. Does it fit in the portfolio? And don't be afraid to go ahead and hang on to it through this tough time it's having. If it's still a solid and growing company, it will come back into favor. Maybe not this week, but sometime.
Okay. So the floating rate fund, wouldn't that grow with rising interest rates too, or
No growth there. What we're really talking about is the interest rate you're paid will grow over time. But there's two problems with the floating rates you got to be careful with right now. I don't think you have to be careful, but I think you're going to get a little bit of an offset. Number one, people are piling into this sector. Number two, corporations are doing so well, and so with so much money available, they are able to negotiate and pay off the floating rate notes and shrink the spread, right? The spread is above, how much above LIBOR does this particular company have to pay to get the money? And the answer is that's shrinking, even though the underlying LIBOR rate is rising. So it's a little bit of an offset. You won't see a full 1-for-1%, I don't think, in a raise. But it doesn't mean your company's growing. It's just a higher interest rate, okay?
All right. Thank you very much.
Thank you.
All right, Jake. What's a REIT?
A REIT.
What's a REIT?
Real Estate Investment Trust.
Okay. So you buy real estate?
It's basically a stock that owns real estate.
And that became popular back when the housing went under. Remember that?
No, it was not popular then, but it was. But
Remember
they picked up after the fact. Yeah.
Okay. Was that because people were buying investment properties?
Yes, and some of them were doing. Now, though, that's separate because that's just personal. But there were a couple publicly traded REITs that started gobbling up housing as well. They're not doing all that well, frankly, Kevin. It's a tough business.
Indeed. Speaking of the same old, Liberal Steve joins us now. By the way, if you have a question for Dave Petzo, 580-5436, 580-KIDO. Good morning, Liberal Steve.
Well, speaking of reeking, good morning, Mr. Miller. Good morning, Mr. Petzo.
Good morning, Steve.
I left my dollars in the Pebble mine, but took a huge hit up in Alaska because I'm hoping, and I want to know what you think. Do you think Pruitt's going to turn the EPA around on that? Or do you think the locals will be able to hold it back with trying to protect the salmon? That's my first question. Then my second question is, could you recommend any magazines or websites that are best for future companies that deal with electronics and stuff? I'm taking a look at investing in PELV. Are you familiar with PELV? It's PL-B International.
No, I'm not familiar with them. No.
He's a Dutch developer.
By the way, Liberal Steve, there's a thing called Money Matters Saturdays, 8 to 10, for more specific information. So, can you translate what he's talking about with this Alaska rush for gold or whatever?
Okay, but then the other thing is the Dutch developer.
Okay, Dutch, hang on, one at a time, because you're losing us.
Okay. As far as energy, are you talking about opening up the preserve up there, right?
Right. It's huge. It's absolutely huge.
It's potentially huge. Here's the problem that I see with it is what you're really saying is, can we, on one hand, yes, we can. Will we, on the other hand? I'm not sure we will, and here's why. You're talking about a tremendous, tremendous investment. We are now the Saudi Arabia of natural gas. With technology, yes, in fracking, but with technology all the way around, we're able to have renewable energy combining with natural gas, and I just don't see a great future for oil. Do I really want to develop a field for billions of dollars, and I mean billions of dollars, that needs to be productive for the next 30 to 40 years to get my payback? I'm not sure that I do. I'm not sure that there's not easier oil to get to. I realize that there will be some development there, but as far as something like the whole North Slope was, I don't see it being that big.
Okay. And then on this Dutch developer on this vehicle, have you watched the videos?
No, I have not seen the videos. And as far as if you're talking about autonomous vehicles and things, is that what you mean?
This one flies.
Awesome. No, I've not seen that. But yes, I think Google everybody else. As far as investing in that, no, don't touch it. Don't touch it.
Okay.
No, here's why. The first ones out don't usually make the money. Okay? Think of the computer. That was a fairly big deal, right? All of those guys went bye-bye. All of them. Okay?
Including IBM.
Well, they are the ones that silly IBM gave it up, right, to Microsoft, right?
Yeah.
So, but that's
Exactly.
a software company. The computer innovation companies all went away. Commodore, something college, I can't remember all the names, but they're gone. And you think about all the great innovators or the first ones out. That doesn't mean you have an advantage, right? But you aren't necessarily the winner. So stay away, be careful, unless you really know what's going on at that company. If they've got defendable IT, then you have something there. But I think all these companies, whether it's Google and the 100 others that are running at it, I just wouldn't bet on one company at all.
Okay. Thanks, Dave. You stay fired up.
Thank you, Steve. Appreciate it.
Yeah,
You too.
always insightful, liberal Steve there. You never know what he's going to talk about, and that's why we have him on, to add a little spontaneity. So your boy Elon Musk last week launched the largest, biggest rocket ever.
Yeah.
People are cheering for this man. He's got his Tesla in space. By the way, at KIDO Talk Radio, you can actually see the live view of this going on. Does this change your view about the solar-powered giant, the man that's reinventing
the Barnum and Bailey circus sayings? No, it doesn't.
the man who's reinventing the car business as we speak?
I love what he's done. He's a great innovator. There's no question about that. But I also think he's quite a showman. And unlike Howard Hughes, who actually delivered the goods, he has not. And so because we're going to blast rockets into space, we're going to pretend we weren't an abstract failure in Solar City, that Tesla's going to be okay, and it's okay to say we'll make 10,000 models this quarter, or 100,000, and then we make 10, and then it'll be delayed, and it's okay because don't worry, because next year we're going to make $1 billion. I just don't think that's okay. And the fact is that Tesla is burning money so fast, I'm not sure that when somebody turns around and says, that's enough, because if they said if it's enough, Tesla shuts the doors. It literally is that bad on a cash burn that they have to raise money consistently over time. And money is plentiful in the world, I get it. But I really don't see how Tesla turns a corner without all the dilution to make it a good investment.
More coming up with our friend Dave Petzo next. Kevin Miller, KIDO Talk Radio. And we continue on here. Kevin Miller in the morning. Want to remind you, by the way, at KIDOTalkRadio.com, a special event coming up. And, again, there are so many news organizations here in the Treasure Valley, but this is an exclusive that we have, and I'm sure that our friends at the other news outlets will pick this up. But Preston Sharp is coming to Idaho, and we have that story for you at KIDO Talk Radio. He is the 12-year-old from Redding, California. He's captured the attention of the nation with his efforts to honor the fallen. Steve Hartman of CBS News did a story on him. Our friend Tammy we had her on last week, but he's going to be at Dry Creek Cemetery on February 17th. Now that's at 9600 Hill Road in Boise. You're encouraged to be there by 8:30 to help him put red carnations and flags on the graves of Idaho veterans. A young man that is truly making a difference. And Dave Petzo, I know you watched the State of the Union, and there you have this young man honored by the President of the United States coming to Dry Creek Cemetery on Hill Road in Boise this weekend. That's big news.
It is big news. I think it should really help, draw people out. I thought the State of the Union was very good. I really did. I just really enjoyed that, and I thought the choices of all the heroes, if you will, American heroes there, were terrific. I thought they did a great job.
Well, very different from Obama.
No doubt about it. Yeah.
Very different from Obama.
It certainly was. He actually talked about some things.
Indeed. So let's talk a little bit about something else. Bitcoin biting the dust now. Billionaires turned into millionaires. I think it's up to 9,000. It was almost down to under 6. Now it seems to be rehabilitating itself. Many people are skeptical of Bitcoin. In fact, you have some of the great credit card companies will not let their customers buy Bitcoin. What do you make of it? And I know you had a lot of regret for not getting into the Bitcoin realm for a while.
It's not going to. There'll be lots of regrets. There'll be lots of companies that I don't understand and don't buy, and a lot of things that I won't buy. I don't understand it. I understand that there's a great technology behind it. That people, companies are going to spend billions and billions of dollars developing this chain, technology, and that it's going to revolutionize the way that we transact money. But Bitcoin and Petcoin and all the others.
But how can you go from almost at a high of almost 20,000 to dropping in value because people apparently they were starting to look at regulating it, or government bodies and financial institutions were looking at trying to figure this out.
Yep.
And with that caused an immediate drop in value.
Well, there are, and they do want to regulate it. They don't want money. If the Chinese say you can't take your wealth out of their country, they mean it. And you disappear. You are killed if you do. But Bitcoin allows people to hide and move money overseas. If you're in Venezuela, same thing. You move money out. If you're a drug dealer, you do drug trades that way. It's a means to do things cloaked. Now, when you think about what really changed it, we talked about this as they were making this change, was it became a two-way street. We had the ability now, as soon as they created a futures market, then the ability to also bet that Bitcoin would go down. It couldn't be hoarded. It couldn't be controlled the way the Hunt brothers did silver. They couldn't corner the market. So you have people that bought it and just hung on to it, and there was shortage of supply, therefore it just kept going higher. Now you can bet on it going down. When you have true two-way trading going on, then you have a real market that's created. I believe that was the beginning of the end of the Bitcoin only going up.
Well, what do you think it's going to happen to it now?
I don't know why it exists, Kevin, so I can't tell you why it should go up anymore. I don't know why it doesn't just go away.
Well, it's fascinating when you think about apparently a physical Bitcoin, if it exists. It takes hours and hours of computer energy to create this crypto coin, if you will.
Yeah.
And you have to wonder just how efficient that is, because you have people just coming up with Bitcoin farms all the time doing this.
That's exactly what they're doing. They've raised billions of dollars to go farm for Bitcoin. It's one of the most incredible wastes of energy, time, resources that I have ever seen, is to go mint a made-up currency.
Indeed, but the made-up currency has some intrinsic value, at least.
No, it does not have any intrinsic value. It has perceived value.
More on that in a minute as we continue on. Phone number is 580-5436, 580-KIDO. Let's get you to work. And back to Dave Petzo with Kevin Miller here. So let's take a look at what we can expect for the rest of the week.
I think diminished volatility, but still volatile. It just seems like things are quieting down a little bit as we headed towards the end of the week. But we'll see. I would expect dip buyers to start stepping back in now that the volatility is diminished, and I wouldn't be surprised to see a bit of a rally this week.
A bit of a rally when we take a look at this. What would you attribute that to?
Just simply the greatest corporations in the world are now at a reduced price. If you wanted to buy a great corporation, Apple, you now suddenly get $20 a share off. I've never seen anybody react this way to a market of anything other than stocks, where if something goes on a discount, people run instead of running too. I mean, you don't go to a store. I know it sounds simplistic, but nobody goes to the store and says, hey, by the way, when I love this suit, 50% off. I'm not going to buy it, though, until it goes back up in price. So call me when you take it off the sale. But in stocks, they do. It's really bizarre. So you identify great corporations, and then when they go on sale, you pick some up. And I know always we feel stupid as human beings that, hey, it's only 10% off, and now it might be 20% off, and now I feel stupid. Don't feel stupid. You never can get the low. Just go. Just move forward.
But on the other hand, what do you say to people that are, that you deal with, that is their income now?
Yep.
The funds that they've built up over the years.
Kevin, great point. And exactly the point we were making earlier. If you needed money in the next year and you were in the market, you're foolish. That's just plain and simple. You don't try to time the market and wait till everything looks great, I need my money. You have to plan for that. So you really need these reservoirs of money of 2 and 3 years where you're out there in something like the floating rate notes we talked about. You want to earn something, but you're not going to get full participation on the up or down side in the market. You have to have income generating things on an ongoing basis. Procter & Gamble is going to pay their dividend, whether it's at $90 a share or it's at $70 a share. And that's what you rely on for income is that dividend, not the price movement. Quit focusing on the bottom line. That matters when you're dead. What matters now is the income that it's generating, not the price.
Indeed, but again, you have a lot of people, with their financial planners, they throw everything in there and, they have a rough week and all of a sudden they get scared.
They do, and that's what happens. Fear sells. Be careful of that. Be careful of the sharks. They want your money. It won't work. There's no way to protect it, blah, blah, blah. You can't have market returns without market risk. That's the way the world works. You don't go and hide it in gold. Come on, don't be so afraid.
So you're saying hang in there.
Yeah, I am.
Hang in there. Shocking from Dave Petzold.
I know. It's all new.
Good to have you back. You're listening to Kevin Miller on KIDO Talk Radio.